Welcome. Today we're going to talk about rental dwelling insurance, a topic you probably didn't give much attention to, but you really should. So today we'll cover what you need to know. But first, some introductions. I'm Dave Holt. I'm co-founder of Surevestor. I'm also a longtime property manager. I've been doing property management for nearly 35 years. I'm also a long-time member of NARPM. I'm a past president of the association and a current national instructor. And I'm passionate about insurance because I know how this can help our industry minimize our exposure to risk. So Kevin?
Hi, Dave. Kevin Knight, also co-founder of Surevestor and a longtime property manager. Been doing property management for a little over 38 years, quite a long time. Currently, we manage a little over 700 doors. And, you know, Dave, we're both CRMC property management companies, so I like to think we do property management at a pretty good level.
Absolutely. So, Kevin, what do our listeners need to know about rental dwelling insurance?
Well, there's a few things they need to know, Dave, like what kind of dwelling insurance does their owner need? And also, what is the difference between additional interests and additional insured? And also they need to know the questions or answers to the questions that their prospective owners or current owners might ask them, like, why do I need to list you as additional insured? I hear that one all the time. Or don't you have your own company insurance to cover you? As property managers, it is important that we know the answer to these questions for our owners in order to properly protect the owner and ourselves.
Right.
Let's get into what you should know about dwelling insurance. Dave, did you know that homeowners insurance is only designed to protect owner-occupied properties?
You know, that's a good point, Kevin. You know, when we bring on a new owner, oftentimes they're renting out their personal residence, and they may think that their homeowner's insurance gives them adequate protection, adequate coverage, but it doesn't. What they really need is a different type of insurance. They're now going to be having a third party, a tenant living in the property. So they need this liability coverage as well as the protection for their dwelling. And it's referred to as DP3, a dwelling property all risk type of property. And then there is some cost differences between the homeowners and the rental property, this DP3, that they'll experience. Now we see roughly 10 to 20% more for the rental dwelling insurance than what they've been currently paying for in their homeowner's insurance. So Kevin, they should also know about replacement costs versus actual cash value. So can you explain that?
Yes, Dave. The difference between replacement cost is it pays for the full replacement cost of the item, where actual cash value only pays for the depreciated value. So let's take a roof. You get a hail damage for a roof. If you have a replacement cost, you're going to get the whole cost of that roof replaced minus the deductible. With actual cash value, you say, let's say that roof's 10 years old. Well, they're only going to give the owner half the value for that roof, plus minus the deductible. So the owner's going to be coming out of pocket much more. So that replacement cost is really important. Also, insurance companies have what they call this 80% rule for the dwelling insurance. And according to this standard, their dwelling needs to be insured for at least 80% of the replacement value. This is really important. Not having enough insurance will result in a co-insurance penalty, causing the owner to come out of pocket more over their deductible.
Right.
So really, you want to make sure your owners talk to their insurance agents about setting the proper value on their properties. So Dave, how is the property manager supposed to get protected?
Kevin, this is a great point, and it's a difference between additional interest and additionally insured. Now, some insurance companies will offer to add the property manager as additional interest. That happens quite often, but it's not the same as additionally insured. An additional interest just essentially means they will notify the property manager of policy renewals, cancellations, or changes in the coverage. It does not extend coverage to you as the property manager. Kevin, what they want is to be listed as additional insured. That's how they get protected. So Kevin, being listed as additional insured, what does this actually mean for the property manager?
Well, one of the things is if they're only additional interest, that leaves them vulnerable for really all their legal fees are resulting from claims and lawsuits from the property. Their E&O will not cover them if the issue wasn't caused by their negligence. And a lot of times things just happen at the properties. That's no fault to the owner or the property manager. You know, there's burglaries, fires, water leaks. There's just numerous of ways that a tenant could get hurt on a property.
Right. Now, to that point, they need to check with their E&O because it may cover, but we've experienced, and I'll share a story a little later, where my E&O did not cover me. So they need to check with their current insurance if they have E&O coverage. But Kevin, to solve this problem, many property managers require landlords to add the property manager to their insurance policy as an additionally insured, which then extends that landlord's liability coverage to the property manager. So Kevin, why do our listeners want to be added as additional insured?
Yeah, yes, you're right, Dave. You know, most of our management agreements, it's actually in the management agreement requiring the owners to name us as additionally insured. In Texas, we have a state management agreement, and that clause is in there, and I find it's in most contracts across the country. And one of the big things is because management companies, you know, we do not hold title to that rental property. So we can't get the required general liability on the property that we don't own. Right. And so if there's a lawsuit filed when you are additional insured, then the owner's insurance will defend both the owner and us as the property manager. So that's why it's so important that we make sure that owner lists us as additional insured, and it prevents us from having to come out of pocket and pay for our legal defense costs up front.
You bet.
Other things is you never know when you're going to get sued. I mean, you know, slip and falls, CO2 poisoning, mold, there's just tons of examples. We have one going on right now on a vacant house where a showing agent got hurt. I'm glad it's not very serious, but it's still a problem. So when these things happen and you're additional insured, both you and your owner will be named in the lawsuit regardless of fault. But as being the additional insured, the insurance company will automatically assign an attorney to represent both parties. Mm-hmm. And that way you're not coming out of pocket for your legal defense costs. Dave, I know you have a story about a situation that happened where you weren't listed as additional insured.
Yeah, you know, Kevin, and I was referring to that I had E&O, but I wasn't listed as additionally insured on this owner's dwelling policy. I was listed as an additional interest. And here's what happened. There was a mold claim. And this wasn't, and the reason why my E&O didn't cover it is because there wasn't any visible signs. There was no error. There was no emission. I didn't do anything inappropriate, nor did the owner. I mean, you could not see any mold. This tenant had a son who was allergic to mold, had allergic reactions. And so they went and tested it, and they actually found some mold on a tack strip underneath the carpeting. So they literally had to pull back the carpeting to find it. They did some evasive testing. They didn't find any mold behind the drywalls, anything like that. There was not even any harm done to the child. But what happened is that they were thinking, well, how do you know that our child won't come down with something in the future? So they wouldn't allow us to, we even offered to let them out of the lease. They said no. And they did vacate, but they still filed suit. And that attorney deposed everybody in my office. It went on for over a year. The attorney fees got up to over $150,000. And basically we were forced to settle. And that's the problem, is that, you know, we had no coverage. I had to get my own attorney to defend me, and it cost me $30,000 just to defend me. Because if we went to court and tried to fight this and win, it would have cost $100,000 just to prove a point, just to win. So they had us between a rock and a hard place. So that's where it would have been really important to have that owner's policy defend me by listing me as additionally insured. And so I learned a lesson the hard way. And that's why we're trying to educate the listeners here on being listed as additional insured. It's not the same as being listed as additional interest. So, Kevin, Now, what do they need to look for to make sure they're being listed as additionally insured on their owner's policies?
So Dave, when they tell their owners that, hey, need to list as additional insured, and a lot of times they will get a copy of some document, whether it's the whole policy or just a deck page that'll show how they're listed. And if it says that the company is listed as additional interest or certificate holder or interested party, they have no coverage. No, they only will be notified if there's changes to the policy.
Right.
So they want to make sure they are specifically listed as additional insured on those documents, so that liability coverage will extend to them.
Right.
So Dave, what do they do if the owner or the agent tells them that they can't list them as additional insured because they're not named to the property title?
Yeah, that's funny, Kevin, because this does happen quite frequently. But these insurance companies, these agents, sometimes they just don't understand the difference between additional insured and additional interest. And they may be telling you that they can't do this, but as a PM, you certainly do have an insurable interest. And you can give your owners the educational materials that Surevestor has and send it to or even send them to our website so they can get a quote and compare. And our policy automatically lists you as the property management company as additionally insured. And it's really important, Kevin. I mean, so when they're going out and they're seeing the information coming back on these documents that you just mentioned, it's really important that they see that they're listed as additionally insured. So Kevin, why is it in the best interest of the owners, our property owners, to be listing us, the property manager, as additionally insured?
Dave, it really is in their best interest to list us as additional insured. It really helps make the claim or the litigation process easier. When the policy extends to both parties, then they're able to make a united defense with one insurance company representing both the owner and the PM. It not only streamlines the process, but reduces the cost all around. Without additional insured endorsement, that property manager is going to have to cover his own expenses up front and then seek reimbursement from the property owner under their indemnification clause, which is much more time consuming, but also costly process, because now they're having to pay their fees up front, and they may even have to sue their owner to get reimbursed for their fees.
Right. And I could have done that to that owner. I mean, I didn't, but that would have been another long drawn out process.
Right. And so I've had owners ask, Dave, why don't you have your own insurance to cover you?
Right. So as I mentioned, we did have our own E&O, and property managers, typically they carry E&O and general liability insurance, but this only offers protection from claims that are a result from negligence by the property manager. So you got to check your E&O to make sure to see how you're covered and if you really would be covered. It does not offer any protection typically against lawsuits concerning the home itself, as we previously discussed. So next, I'm going to go through the benefits of the owner, and Kevin, I'll turn it over to you to share with the benefits of the property manager. But the policy that we have in place, it's a great policy. It's $1 million in liability coverage. There's up to 12 months of loss of rent coverage due to covered events. So let's say there's a fire and it took a whole year to rebuild the house. That your landlord client could get up to 12 months of loss of rents. Also 100% replacement costs. Kevin, you explained the difference there with replacement costs versus actual cash value. It's important that a policy has 100% replacement costs. There's no credit checks to our landlord clients. It covers sudden and accidental discharge of water. Now, this is an important one because we experience these quite often, and not every dwelling policy has this type of protection. So you want to check with your current policy, but the Surevestor policy includes it. It covers vacant and occupied properties. It also covers events when it's in rehab. It covers liability, fire, hail, windstorm, vandalism, theft, and malicious mischief. And as we know, Kevin, sometimes our owners have their properties in a different type of entity, not their personal name, which is good business practice, by the way. They might be even a trust, an LLC, a partnership, for example. And so it covers those entities as well. And of course, the big benefit and the benefit to the owner is that the property management company is automatically listed as additionally insured. So Kevin, how about for the PMC?
Well, Dave, what you're just mentioning about the automatically listed as additional insured, that's also a big benefit for the owner. I mean, the property manager. So that's, to me, that's their number one. Hey, you're covered. There's that $1 million in liability coverage on that policy. And as the property manager, you're automatically listed as an additional insured. So you'll fall under that protection. And this is world-class protection through Lloyd's of London. So this is really high quality commercial grade insurance. We provide education resources that you could give to your owners to help educate them, why they need to name you as additional insured. And this is only available for professional managed property. So this isn't just something they could go get anywhere. When we offer products like this, they have to be professionally managed to be able to access this.
Right. And really, Kevin, that's one of the big differences between us and other insurance companies that are offering that, is that we are property managers. That's our main business. We're offering this to our property management colleagues to try to help our industry. And so that's why we're making this only available for landlords that are professionally managed. A huge difference when they're out looking for these types of products. So Kevin, if our listeners are interested, how do they get started?
Well, it's really easy to get started. Mainly, we just ask them we have a little sign up just so we know who they are. So they could click on the QR code, or they could go to our website and just, or even just send us an email and say, hey, they would like to offer this, or let their owners know about it when their owners don't name them as additional insured. And so basically they'll just refer their owners to us to get a quote. And, from what we've seen, our prices are very competitive. And so they'll get their owners signed up and they're covered. Right. So if they have any questions, you guys have any questions, please put them in the chat. We're more than happy to answer questions. If you think of some later, you could just email info@Surevestor. And look forward to working with you all.
Absolutely. So Kevin, now we're going to be opening it up for questions for Q&A. And again, if you have to leave or want a recording of this, we can send you a recording. Just let us know at info@surevestor.com.